Have you ever wondered what really happens when a business owner decides to sell their company? Today, we're going to dive into the world of business sales and why the mindset of a business owner is so much different from that of a financial buyer. Let's start in the beginning. Imagine you're an employee with a big idea. You take it to your boss, but it falls flat. Maybe you try again, the door stays closed. Eventually, you realize if you want to bring this idea to life, you got to do it yourself. So you take a leap. You leave behind the safety of the paycheck and you become a founder. You cross the chasm from worker to entrepreneur. The reason you're doing that is because where others see risk, you see opportunity. Sometimes you're a visionary that sees a future that others simply cannot imagine. So fast forward years, maybe decades, and the business has grown. You built something lasting, attracting loyal customers, employees, and partners. You've accomplished more than you dreamed you were going to at the beginning, and now you're ready for the next chapter. You're thinking about selling your business, the one you've poured your heart and soul in 365 days a year, 24 hours a day, 7 days a week, for as long as you can remember. And let's say you run a formal sale process to go get the best offer. So that means hiring an investment bank, having them create the market and find those buyers, looking at offers from each of the buyers, selecting one, and going through to the end with them. Now, most often, that is going to be a financial buyer. Maybe you don't know that term, but what a financial buyer is something like a private equity fund. You've probably heard of that. You probably think of them maybe in a light where they buy big companies and that company stops existing, such as Toys R Us, Jo-Ann Fabrics. Unfortunately, the list goes on that side. However, there are tons of private equity groups around the country, and many of them are interested in working with the owner of a business. However, they're different than you as a business owner. A lot of them have financial reasons for getting into buying a business. There's other people called independent sponsors. There's family offices and just simply private investors. So unlike a strategic buyer, which could be a competitor of yours or a company in the same or similar space that's bigger than you that might want to buy your company for broader business reasons, financial buyers are laser focused on one thing, and that is financial returns. Surprise. These buyers are experts at evaluating businesses as investments, and they are looking at your business to find the areas of risk, almost to convince them that it's a bad idea. And every time they see a risk and they can assess that it's actually not a risk, it kind of pushes them more and more in the term of deciding that it might be a good idea. But they are not you, and they don't think like you. They are, like I said, they're investigators into risk. One of their biggest questions is going to be, why is this business for sale now? They want to find all the things that might make them uncomfortable and find a way to get comfortable with it. And sometimes there are things that they just have decided they're not going to get comfortable with. So often it's customer concentration. It could be industry. Sometimes you could get a no for something as simple as, who your biggest customers are or something of that nature if they just don't have an interest in being part of it. They see the data, but they have trouble seeing the story behind it. So how do we bridge the gap between being a business owner and talking to a financial buyer when you have two completely divergent risk profiles? The key is to prepare, to get ready to have those conversations and be ready for the questions that they're going to bring up, knowing that sometimes it's tough to communicate your story and your company's true value to someone that is strictly focused on financial returns. So that's why having a partner in the process can be helpful too. Someone who understands both worlds. They are bilingual. They've talked on both sides of this situation, and they can help guide you through. So whether you're looking to sell now or years down the road, start thinking about your business like a financial buyer, audit your business, align your practices with long-term goals, and really take charge of the future of your company. There's tens of thousands of different financial buyers out there, so it's very likely that if you have a saleable business, they're going to be the kind of person or the kind of group that's interested in purchasing your business. So the goal and the whole point is to be proactive in dealing with what a party like that will be looking for in your business before it's time to sell. If it's something you want some help on, or if you just want that perspective for your business, feel free to reach out. We're happy to just talk about how those buyers think and help you in the process of maybe building your business toward an exit so that you know what to expect when that day may come.